Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, July the 1st, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. So far, so good. Wave 1 ended back about 3 years ago at our target from 115, 120. We reached 114.72. We've been stair-stepping lower. Right now, we're on route to go lower toward 80 is the plan. We expect a deeper retracement regardless. Typically, we're looking for a deeper one for 78.6%. That comes back from 2007 bottom, where we bottomed up 70.53. And 15 years later, we grinded higher to complete this destination 1. And now in the last 3+ years, we're working on our destination 2. And we're looking for a 78% retracement, 78.6% retracement of that move. So far, from this recent candle that just closed for the month of June, we can see we broke below that 38.2% retracement off of this swing point low. And Emil, off of the swing point low from COVID low, we broke the 618 level, which you can see I have that in corresponding color. 38.2 is this light blue aqua color, and then the 618 off of this swing point low is this magenta, and we close below both of those, and this is a candle body. So the prognosis is we're likely going to extend further down, but we're at an extension where we're ready to get a bit of a bounce. So I think we can get another lower high, lower low scenario. But as we were talking about, this was critical because it opens up the door to 85, 82 area, which is the extension from this low to that high. You break the 618, you start moving 75% chance. We'll go over here to the charting platform and show you exactly what we're talking about. From that COVID low, which is here, to the high, we broke the 618, based on that price movement up until yesterday, and we closed below, so that opens up a 75% chance we're going to grind lower down toward 85, and a 70+% chance we're going to grind down toward the 1272 extension, which is around 82, and both the 85 and 82 areas are getting awfully close to our target, which were originally laid out between 82 and 78, basically splitting the difference right around 80. So there you have it. This monthly candle did set up the idea that this is a likely neighborhood we're going. Could still take us years. Remember when we talked about topping and reversing? We said this would literally take years to get down here. And sure enough, 3 years into it, we just now got a nod that we closed below the 618. Now we have a 75% chance we're going toward 85, 82 area, and we like those odds. So what I was talking about at the beginning of this was that we might need a bounce now that we reach some extensions. And let me stretch this out, zoom this in, and show you what we're talking about. That from this recent low up to that high, we broke the 618 right there. And that stated we had a 75% chance we would go to 97.34 and a 70+% chance we'd go to the 1272, which was at 96.82. And sure enough, we reached both of those. And then on the recent low here to the high, we broke that 618, setting the tone we'll go to 97.36, 97.13. And Emil, lo and behold, Ian, James, Mr. Tucson, we reach both. We reached this one, these two, and these two, and we actually went to the 1618 on the shorter term. So, yes, I definitely think there's a lot more downside, but typically after you start reaching some extension, it's time for a bit of a bounce. So how do we know we're likely going to see a bounce? Well, not just because we see a little bit of wick here, but the reason we're getting prepared for a bit of a bounce here is you go to the software and you look at the dollar index on the daily chart, and our daily is exhausted. And not only did it make it from overbought to oversold, but it's been on a slingshot palooza for a very long time. And that's because our weekly cycle down, along with our daily cycling down, and this is typical behavior, but notice the daily's at extremes combined with the weekly being at extremes. So this is why we're expecting some sort of bounce here. Now, do we get another weekly that turns and hooks and then we get another slingshot? Well, the monthly is also getting near oversold. It is still down. So we're getting to the trifecta that we may need a nice little hardy bounce coming sooner than later, but no later than later. Everybody good so far? So a little bit of a bounce here, and we're likely going to see it coming sooner than later. Any questions? So between the software telling us we got daily, weekly, monthly, and oversold territory, it's not the oversold that we're concerned with. It's when it starts to hook that stimulates and tells you it is time for a bounce. Everybody good? So not only the technical picture, reaching extensions, as we talked about, keep selling the rallies and the downtrend, that we were likely going to achieve these targets. And lo and behold, we did exactly that. Amen. And the software setting up where it typically needs a bounce. So across the board, high probability we're going to get a bounce out of this. Everybody good so far? So how big is the bounce going to be? I think we could obviously rally in toward, if you're using this template in MetaTrader with the Ichimoku cloud, we could potentially see the daily depressurize and start rallying toward the cloud here, or it might be time for us to visit that Magic Fibo that is certainly declining. So as days pass by, this will keep sloping a little bit lower and lower, and maybe we run into both. Maybe by the time we get there, it's intersecting both of these. But I'm definitely looking for a lower high, lower low. And even if we rally all the way toward the Magic Fibo, I'm still looking for that lower high, lower low. Fair enough? All right. So the key is going to be to watch the software. Critical. That if we can get a daily PAI hook, just like we saw weeks ago, when our weekly crossed, we call this a PAI hook and a trend momentum cross. When that happened, that gave us extremely high probability once the weekly hooked and crossed, the daily would cycle down. So notice as we draw your attention to what happened in price action, once we got that PAI hook and trend momentum cross, PAI hook, trend momentum cross, we had steep slope, angle separation. So at this point, we had an extremely high probability the daily would cycle down. And as we started driving lower, we slingshot up, slingshot down. We finally got our cycle down. Then we started the slingshot palooza, lower and lower and lower and lower and lower, continuing to push lower, lower high, lower low, lower high, lower low. And this is what we call a slingshot palooza. But this is very typical behavior when a weekly hooks and crosses. The daily has to cycle, right? We got a weekly hook and across to the downside. Highest of highest of highest probability, the daily is going to cycle down. And because the weekly takes longer to cycle than the daily, obviously, then the daily must slingshot palooza to get the weekly to cycle. Well, not only did our weekly cycle, but it actually slingshotted lower as well because the monthly had what we call a PAI hook and a trend momentum cross, steep slope angle separation. So this is what's key, and what's unique is that once you get a monthly hook and a cross, it takes about 2 to 5 months for a weekly to cycle. So options traders love this because once we know we have like a daily cycle takes 2 to 5 weeks, a weekly takes 2 to 5 months, and roughly a year, the monthly cycle, full cycle, takes about 2 to 5 years. So in that monthly hooked and cross, we knew the weekly was going to cycle, so it'd take 2 to 5 weeks. And if you start counting these weekly candles, we got 1, 2, 3, 4, 5, 6, 2 to 5 months would put us somewhere in that 8 to plus candles, that is. And you can see the easy way to do that is with your crosshair. So you can get on that candle and come down here and see that was 22 candles. So that's roughly your 4 to 5 weeks. Isn't that interesting? Amen? So not only did the weekly cycle down, but we also saw the daily do its slingshot palooza. Why are we thinking this could definitely go lower? I do think it's going to go lower, but I think it's time for a bit of a bounce. Just like we had when we were slingshotting here, we got exhausted. We needed a bit of a retracement. Before then, we continued lower, and the process continued. Well, now the weekly is oversold, so we're expecting that to depressurize. And now the monthly is oversold. So it's time for some depressurization. This does not mean the monthly can't turn up. Let me do that again. Doesn't mean this monthly couldn't possibly turn up to slingshot lower as this continues to push a little bit more. But we're touching the Magic Fibo. We're bouncing off the monthly, so that would suggest we get a nice little bounce as well. And then once we finally break below it, retest it, then I think it's really going to set the move for the much lower move, not quite that far, down to our target somewhere around that 80 area. Fair enough. And how are we going to get there? Monthly continues to push, and then we slingshot lower and maybe a few times lower by the time we get there. Any questions on that? So go back to the charting platform. Again, this doesn't mean we can't possibly continue to push lower. Sure, it does happen, but it's getting less and less likely until we get some sort of retracement. So I'd be careful to the downside right now on shorting the dollar till we get some sort of rally in which to sell. And for those of you trading the euro dollar, pound dollar scenario, our Forex traders, we did exactly what we needed to do. We not only went to the previous 116.50, 117, but if you'll remember a few months back, when we talked about this other move from the high to the low, when we broke above that 108 area, we talked about a high probability we're going to 113.60, 114.95. We did that and then some. Then, most recently, we did a nice little pullback, and we did the same. From that high to this low, we broke the 618, which is around this 113. And we talked about buying the dips until we got at least to the 116.50, 117 area, and we've even exceeded that by a little bit. So there you have it. High probability trades, you take it when they set up. Otherwise, I would not be very bullish short term, especially if I'm just trying to scalp and make a few pips here and there. I would not be going long right now, knowing that the euro is likely going to give us a pullback as the dollar is likely going to bounce. Inverse relationship: when the dollar index goes up, the euro dollar goes down. When the dollar index goes down, the euro dollar goes up. Perfect relationship. That's why we call it the inverse relationship. It goes the opposite direction. And looking at the software, why do we believe the euro is ready for a little bit of a pullback? Well, it's exactly what we saw in the dollar index, but in inverse. We're maxing out. The daily's overbought. Yes, it could continue and grind a little bit higher, but it's due for a little bit of a pullback here. And my weekly is also overbought. And even the monthly is getting overbought. So likely we're going to get some sort of retracement. I would like to see on this euro dollar breaking above the Magic Fibo. I'd like to see it come back down. If it holds and bounces, then that sets up more upside via what we'd call this a little slingshot. This will turn over to slingshot higher, and we'll get a little retracement to another push. But for now, I would not be buying the euro dollar long as an initial investment short term. Long term, we said 3 years ago, high probability when it was at 0.95, hey, this is a great opportunity to go long because we got a monthly, weekly, daily, everybody setting up for this move. Now we're getting the inverse of that, a monthly, weekly, daily getting overbought. So I'm not looking for this to go breaking any new lows just yet. I'm looking for this to make a higher low, higher high via a slingshot, kind of like we did over here, where we had these little smaller ones perhaps, or maybe we get a little larger one, but we just kept slingshotting higher and higher as we went on to all-time highs. That was way back in 2007-ish, but that's not what we're looking for. We're just looking for a retracement somewhere to this 618, maybe 786 zone. Before then we go down and reverse. So on Mondays, we like to look at Elliott wave. And what we're looking at right now is simply this move here. We're going from this A up to this B. And then eventually, once that's done, we'll come back down in C, which would bring us back below parity. And we said from this low to this projected move would take multiple years. Well, here we are 3 years into it plus, and we may need a few more years to finish it. Then, depending if we top out in 26, 27, when do we get there? How long is it going to take to come back down and go back below parity? Maybe we're out to the 2030s, but this is the big picture, not the short term. Short term, I think we're going to go lower because we're at extremes, and the software, daily, weekly, monthly, is screaming we need some sort of pullback. So I would not be going long here expecting this, but you said it's going up to 140, 145. That is the plan. But just like these other pullbacks we talked about, it was prime time, and especially most recently toward the end of last year, and we talked about buying this, that the euro was ready to make a bounce after we bounced off of this 618 retracement from what? This swing point low to the swing point high was a 618 retracement, setting up the bigger bounce. Well, there you have it. I don't think it's finished. We still got a ways to go, but that's the ebb and flow of the markets. Time frames always cycle, and it's time for us to get a bit of a pullback sooner than later, but no later than later. That's why price always stair steps. Got it? So Again, I would not be initiating a long here unless you have a long-term goal of getting up here. I'm long the euro dollar. Been long a long time, since about 3 years ago. I was short for many years, as you well know, those that have been with us for a very long time. And we're celebrating our 15th wedding anniversary, 15th anniversary of GPA Trading Services. Wow, 15 years already, Ian. Can you imagine? Since I started GPA Trading Services. How nice is that? 15 years later, and y'all still with us because we got a long way to go here. So when we're looking at this move, no, Emil, I don't think this is over to the point where, uh-oh, it's going to go breaking lower. But I do think it's time for a bit of a pullback, so then we can get another correction. And it started to look like a 5-wave, so maybe we get another 3-wave correction to start another push higher. But I would not be initiating, even as a scalper, I would not be, I'm going to buy the euro. It's been on a tear to the upside. Well, now it's exhausted. Again, all the software monthly, yes, it's still up. That's not a problem. This thing could just grind like that and still go way higher. But when a monthly, weekly, and daily all get exhausted, you need those pullbacks along the way. And again, this is on a monthly chart, so these red candles don't look like much, but it's still a few hundred points as it pulls back, and we still get the stair step scenario. So yes, I do think it's going to this target. But also, when I get multiple time frames all stating the same thing, this is still up, so this could still grind a little more. The daily has been slingshot palooza. It's possible it could turn to slingshot again and we get a very small pullback. But needless to say, when all time frames start telling you the same question, uh-oh, we're at extremes. We need depressurization. This is telling us we're going to get a pullback, and the 4-hour starting to oblige by hooking. Now, if the 4-hour can give us a hook and a cross with steep slope angle separation, then what does that tell us? The 1-hour is going to cycle. And now we're engaging, disengaging. This is screaming we're going to continue to pull back further already, because we're about to get the 4-hour to hook and cross, which means the 1-hour will cycle. Well, what if the daily starts to hook and cross? Then the 4-hour cycles. And if the weekly hooks and crosses, then the daily's going to cycle. And if the monthly hooks and crosses, then the weekly's going to cycle. So we'll keep an eye on that. How much before we go down, before we buy the dip? Well, that's my job, to look at the charts, look at price action, and give you an opportunity for the next dip in which to buy, like we did on this pullback, getting these targets, and on the prior pullback when we talked about reaching these targets, and how adamant we were about it's time, bouncing off of this 618 retracement on the bigger move, that this was an opportunity, especially after we tried this double bottom higher low scenario that screamed we're going to the Magic Fibo. We break that, we break the 108, then we're going here, onward and upwards we go. Pound dollar, same thing. We kind of reached just shy of our target. Look at that, just shy, right at it. So from the high to the low, we talked about weeks back, even a few months ago. This was back in January. So when we started to reverse, we talked about going to Magic Fibo, hundreds and hundreds of pips. When we got there and we finally broke this 129, talked about going long there, set an alarm. We close above 129.50, go long and shoot for 136, 137.90, and bingo, both achieved. Hundreds and hundreds and hundreds of pips. So from this reversal, we're up about 1,700 pips, not too shabby. Amen? So again, I would not be going long here on the pound unless I was holding it for the bigger picture, but the shorter term, we do need a correction. So I'd look for this to reverse and then buy the dip. And we'll look for the opportunity that went dip to buy before we go breaking out again. Fair enough? So what's the next target of the future? 142.50 area. After we get a pullback, depending on how far we pull back, then we can go back for the 136.27 again. Then we reach the 138 level, and then we can start breaking that. We go to 142. But that's how I do it, Emil. When we pull back, you get a new low, then yeah, my bigger picture would be to 142. And then the shorter term, depending, maybe we come back to the Magic Fibo, maybe we come back and retest the breakout in this area. We shall see. And then we'll start targeting again. We get a new high, we get a new low, and then we, just like we did over here, we had a high, we had a low, we got those targets. So we'll do it again, just like we did the euro. We had a new high and a low. And if you specifically look at this, and I could draw this all day long, but all of these are achieving their target. From this high to that low correction, it reached its targets. Then on the next move, I know it's going to be nothing but lines, that high to that low exactly reach those targets yet again. So rinse and repeat utilizing your Fibonacci extension retracement scenario. And again, when you start going high to low, we reach extensions, high to low, we reach extensions, bigger picture, high to low, we reach extensions. That in itself tells me it's time for a correction. After you reach multiple of these without, another correction, it's screaming we need it again. And then again, the software screaming for the pound, just like the euro. Pound daily, overbought, starting to flatten out. Do we get a hook and a cross like we did back here? If the answer is yes, nice little 4-hour cycle. What happened on that daily hook and a cross? Right there. My daily PAI hook, my trend momentum cross, we had slope, we had angle separation right there. So what did the 4-hour do? Like clockwork, it went from overbought to oversold, overbought to oversold. Simple as that. So do we expect more pullback? Yeah, you betcha. Daily starting to turn. We don't officially have a hook and a cross yet, but once we do, like over here had a hook and a cross, like I showed you here had a hook and a cross, hook and a cross. So we get that again, then the 4 hours likely to cycle down. So as a scalper, if I want to buy a dip and I know my daily's hooked and crossed, when would I look to buy? When the 4-hour would get oversold. So we shall see how this plays out. Fair enough? But big picture is the same. Weekly. Overbought territory. We need to depressurize. We've been slightly doing these little insipid little slingshots. It could continue, but the weekly cycle plus slingshot equals what? A monthly cycling. Interesting, isn't it? And the monthly's been cycling, but slingshotting, that's part of the plan. What did I draw this back here? Talking about how we were going to go from this target up toward that target. And what would the software look like? The monthly would cycle up, and we'd start slingshotting higher and higher and higher in the years to come. And here it is 3+ years later, and we made the cycle and we slingshot it. So how many more? Well, maybe 1, 2, 3. Maybe we get some little insipid ones, but that's the plan. I really don't expect, for those of you viewing and expecting a bigger move, I'm really not looking for the monthly to cycle all the way down right now. I more expect more of the same of this slingshot palooza, whether they're larger slingshots, smaller slingshots, or somewhere in between. I think this monthly will continue to slingshot, but it still gives us opportunities to buy the dip, in which maybe we might see a weekly hook and a cross. Well, once we do, right, just like here, once we get a weekly hook, weekly cross, slope, angle separation, green below the red, see separating of the lines, a steep slope on the hook. Once we get that, then it's the highest probability the daily is going to cycle. Amen? Beautiful. And what happened last time when the weekly hooked and crossed? The daily made the cycle. Then it reversed and started a slingshot palooza as we continued. Any questions on that? So watch carefully that I would not be going long now because we're due for a pullback, and I'm going to look for a perfect opportunity to continue to buy the dip in the uptrend after we get signs and symptoms of what the software and the chart pattern is telling us. I have a God-given talent to read and interpret price on a chart, and I would put my abilities up against anyone else's, and highest probability along with our bespoke software, it's a winning combination. So any questions on where we think the pound's going? Likely, as you look at the daily 4 hour starting to turn over, we're going to see, based on reaching the extensions, we're probably talking at least, and we're not even there yet, probably a 4 hour cycle down. Amen? So, plus, we got divergence. We have a higher high in price, and we have a lower high on the software. So that is divergence. So that means we're going to see more push down. And even before my daily's hooked and crossed officially, we do have the beginning of the hook. We just don't have the cross yet. So keep an eye on this as the time moves. Is it going to be end of day today? Maybe by tomorrow? We get another candle. Well, this, obviously, if we keep going lower, this is going to push lower, and this is likely going to start crossing. Whether it's today, tomorrow, the next day, really doesn't matter. Once the daily hooks and crosses, we know we have a high probability the 4 hours is going to cycle. Amen? Just like it did here. The daily hooked and crossed, the 4 hour cycle. So we're going to get it again. I'm thinking yes, because we're kind of exhausted after that long climb of 1,700 pips from this swing point low down here, right around 121 up to 138. 1,700 pip crawl and run like that. Time for a little bit of a pullback. Amen. We did come back to visit the Magic Fibo one time right there. Do we kind of come back again? This is sloping upwards in the coming days. So what does it take? 4 hour takes about 2 to 5 days to cycle. Well, if my daily ends up cycling, it might take 2 to 5 weeks. So this correction could last days or maybe in a couple of weeks before we maybe pull back toward the Magic Fibo to bounce. I'm not trying to say I guarantee we're going to pull back that far that just yet, but we're not there yet. We don't even have a daily hook and a cross, but based on price structure and patterns, it looks like the 4 hour needs to cycle down. And right now, we don't officially have a 4 hour hook and a cross. We're almost there. We got the hook, we're pinching, but we don't have the separation yet, angle and separation. But that means the 1 hour is likely going to finish the down cycle. And it's not even halfway yet. So there you have it. Again, I would not be going long here. This is not the dip I'm looking for a breakout. This is likely going to continue lower. Amen? All right. Let's continue. But the same rule is, let me go back over here showing you the bigger picture. The same rule is, where are we going? On a monthly chart, the probability is we're going from this swing point low, making a 50/618 retracement zone. So I'm looking for the pound to grind and grunt in the years to come up towards this 157, 170, kind of fine tuning 160, 165. Then we could talk about the same type of move, that this should end up coming back down. As remember, the dollar index, this is a wave 2 correction. So what is the prognosis for this? Once it's over, is it over now? I don't think this is my wave 2. All right, let's just kind of put one over here, click it, control, click and paste, and duplicate another. I don't think that wave 2 is over at this point, and we're ready to go breaking out. Not yet. No reason to believe this is the end. In fact, it's just the opposite, because we closed below that 618 retracement level. That means we're probably going to go lower. Higher probability we're going to end up going lower, but we need a bounce in the short term. So I don't think this is over, but even with that conversation, take this out of the way, that we're still going to go lower. What happens when wave 2 is finally done? You go and break new highs and start pushing toward wave 3 up in the stratosphere. And I'm thinking the dollar is likely going to go toward that 140 to 120 area, somewhere in the 120 to 140 area, making another big push higher longer term. At no point during this pullback destination 2 did we think the dollar was just going to keep declining and go to zero. We're looking for it to bounce and go higher. Fair enough? But eventually, once this is done, then this will be a fun time to go short the pound dollar, short the euro dollar, as this thing will go up for multiple points, and then the pound and the euro will go down, just like we talked about this reversing here and going down multiple points, that we were able to go long the pound and the euro in tunes of thousands of pips. How cool is that? So look at the pound. When we talked about this, we're at 103. We went up to 138, 3,500 pips and counting. Still got thousands more to go, in my humble opinion. But, as I stated, likely going to get a correction. So be careful. Look for the hook, and we get across, then we let the 4-hour get oversold. If the weekly ends up hooking crossing, then this will be delayed even longer and get a deeper retracement and more time consuming. But if not, and it's simply the 4-hour cycle down and we go ripping higher, great. But we got to watch to see if the daily hooks and crosses first, then keep an eye on what is the weekly going to do. Is it going to still stay flat to up and just grind like we've been doing, just kind of stay in this zone and just keep grinding and keep going? Or are we going to get the weekly to hook and cross? Once it hooks and crosses, daily cycles down, and we get a deeper retracement, more time consuming. Fair enough? All right, I think you get the point. Let's continue. So take your profits, look for a correction. Dollar yen, kept warning you during these bounces to be careful. The more the dollar started to break down, this would start to pull back down as well. Now, those of you that have been short for several hundred pips on the dollar yen, up here to 148, down to 142, good 600-point run, I would be taking profits and looking for another bounce. As the dollar bounces, so too should this dollar yen start bouncing a little bit. And are we looking for this thing to go breaking out? No. We're looking for another rally, probably to a lower high, lower low scenario. But be careful, because I would not be shorting right now unless I'm already holding short, expecting our continuation to occur. Well, we're testing from this low to that high. We're testing that 618-786 zone, and we've been testing it for a while. We haven't been able to do what we need to do, break below this support zone. So no reason to believe at the time, right now, that we're not expecting a bit of a bounce. And of course, you go to the software. I do believe I have a dollar yen on here somewhere. And the same thing would apply, that as the dollar is oversold The dollar yen, after that 600-point move lower, is also oversold. There it is. Okay. Thought I had one on here. Now, looking at the dollar yen daily, we're getting in that oversold territory. So this is why be careful on this. My 4 hours oversold, starting to get a little bit of a bounce. So again, that's why I would be taking some profits on this move lower, looking for another bounce higher as the software is starting to reverse. We have a hook and a cross on the 1 hour. My 30 and 15 are cycling up. Beautiful hook, cross, slope angle separation. Got the trigger higher. This is what scalpers dream. You can set this trade manager system automatically to buy that for you. Whether you're at your computer or not, it'll automatically trade for you, put in your stop loss, take profits, ongoing, and take care of it for you. Or you can manually click to trade and allow the thing to go long and manually do it, whatever your preference is. But this is likely as the 1 hour hook and a cross. My 15 or 30 are cycling, as you can see, and the 30 is not finished. So this clearly says the dollar yen's going to go higher. Hint, 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 scalpers, this is going to go higher. So could we like buy this thing and say, let's go long? Sure. Why not? We could buy that. And of course, on this platform, you need this at symbol. See how these have the at symbol? They changed this platform so you can see up here dollar yen. These are grayed out, so you can't trade on those. So I got to find the at symbol dollar yen, and I'll place that trade for a quick scalp. There it is, that one. So I just put this one on here. There we go. Now we'll click to buy and click to trade, and there you go. All right, so it automatically puts your stop loss in place. You can set that via your parameters, how far of a stop loss you want. Your entry point, this will be your take profit 1, 2, and 3. And the system, whether it reverses, it'll stop you out, protect your account, or it'll continue to reach your take profit 1, 2. Once it reaches your take profit 1, it will automatically move your stop loss into profit, and everything's set to go. So I do think we're going to get some more upside. And I'm looking for a quick little scalp to go higher as my 30 should finish the cycle. If the 4 hour ends up hooking and crossing, this will continue. But I'm going to let this run and we'll start to get a few pips here. Of course, when you first place your trade, there is a spread, so we're a little bit underwater at the moment. But I do think this is going to grind higher in the short term. I'm not looking for a big explosion for hundreds and hundreds and hundreds of points, but we are looking for a nice little pop based on my daily in oversold territory, my 4 hour reversing, and my 1 hour with a hook and a cross. So that says the 30 is extremely likely to finish the cycle. And what is that cycle? That is this going up, that going up, at least the trend momentum 1 going up, and red, blue, and the green line, money flow, all of those getting extremely overbought. And that's what we're looking for this to grind into and get some profits. Fair enough? All righty, there you go. So let's continue. What about the pound yen? Again, I kind of warned you that the pound yen was at some extremes. We're likely going to get that reversal. This price pattern, we had a big push lower, tariff talk. Then we had this grind sideways. Now we're likely going to see another push lower in the weeks and months to come. But we're also looking for the markets. We have risk on, risk off type of scenario with the yen. When our markets are ripping higher, it tends to strengthen the pound. So typically the pound yen, when our markets are ripping higher, the pound yen would go up. But our markets are due for a correction. When the markets start really pulling back and having big down moves, The yen tends to strengthen, which we saw over here in August. And then that was the carry trade unwinding, was what the reason they gave for our markets to sell off. And then recently we had the big sell off with the Trump tariff talk. And then the reversal after that. So it typically kind of follows, not necessarily if the Dow and the S&P and NASDAQ are up, then the pound yen is always going to be up. No, but it does typically follow suit. One thing you can definitely say is when the markets are in a turmoil and they're crashing, the pound yen goes down, like we saw in 2007 financial crisis. The pound yen went up here from 250 all the way down to 118, tens of thousands of pips. That is a big move. And then we saw the dot-com bubble burst, and we had the big financial crisis at that point. And sure enough, we got the big pullback. So what's next? Elizabeth, I'm coming to join you, honey. And we're going to get a big pullback on the yen typically strengthens when our markets are having turmoil. That's what we call risk off, risk on, risk off type of investments. So when do I expect the correction? Well, I'm expecting the pound yen to give us a correction sooner than later, but when our markets start giving us a bigger correction, this baby's going to go tanking lower. But even on the current price action, we're due for another push lower. This overlapping chopping action, if this was a pullback and expecting of a continuation, right? You get a little pullback, continuation. You typically get some sort of retracement extension, but even when we started this process, we keep stopping at the same resistance level. From the high to the low, we're right at a 618 retracement. And if we can't go breaking out of that, just like the last times we tested up there, we went lower, and we couldn't do it, we went lower. Well, here again, we're testing it again. If we can't start breaking that, we're likely going to make even another new swing point low. Well, when do I have my high probability conference? We're going to go to 182, 181. Well, from the low to the current high, which is now here, we need to start breaking below 190. I know that's hundreds of pips away, but you're talking about high probability. And I close my mouse. All right, got my cursors back, and here we go. So be careful at this point. I would not be going long the pound yen. Not a good place, just like the pound dollar, euro dollar type scenario. We're at resistance, and we're also at extremes on the software. We can do the same thing, rinse and repeat as we expect. Look, we're now up 5 pips. Woohoo, scalpers, you want to close out, make your profits, or should we wait? Let it finish the cycle, at least. Then take some profits, or if you watch the 4-hour, and by then we end up getting a hook and a cross with slope angle separation, then we continue this process and let the scalp continue to run till this 1-hour gets overbought. But going over here to the pound yen, we can see why we're expecting a little bit more pullback. The daily is beginning to hook and cross. Look at that. Emil, how nice is that? And if my daily is hooking and crossing, then what does that mean for the 4-hour? It means this 4-hour is going to cycle. And what did it do? It cycled. Scalp City. It's like clockwork. You can't make this stuff up. Well, is this bounce likely going to go anywhere? Well, my weekly is also overbought. So we're getting set up for a bigger retracement on the pound yen. So I'm looking for more downside on the pound yen, as my 4-hour may give us a little depressurization slightly, but I'm looking for this to do what? Paint the Picasso. This is likely going to go up to slingshot lower as my daily continues to push lower. And then if we end up getting the weekly hook and a cross, then the daily will finish cycling via the 4-hour slingshotting lower and lower and lower. So this will just keep stair-stepping lower and lower. Should we get our weekly to hook and cross? So all eyes are going to be on this as next few days. Will this hook? Will it cross? If we get the hook and the cross, the daily cycles. Amen? Pretty simple. What happened when the weekly hooked and crossed there? The daily cycle. It's like clockwork. We got a weekly to hook and cross, PAI hook, trend momentum cross. We had slope. We had angle separation. So what did our daily do at this juncture? It went from overbought to oversold, overbought to oversold. Can't make this stuff up, Emil. It's beautiful. Are we about to see the same? Maybe. We shall see. All righty, let's continue. What about the markets? SPX, they're going to grind up. Well, based on the scenario, the high to the low, we broke the 618, 786. We closed above. So the probability we go towards 63 is a 75% chance, but it doesn't mean that we have to go straight up here. I've been looking for a correction. I wanted the correction to start and officially give us a bigger correction before we broke all-time highs. That makes me nervous for several reasons, because remember what happened in 2007 financial crisis. On a 3-day, we did this pullback, bounced off the Magic Fibo to then do this V-shaped recovery and went on to all-time highs to only have a 57% decline with the financial crisis. So be careful. There is massive setup on this chart for a correction. Are we going to get another 57% decline from the high to that final low in 2009? 57%? Well, Elizabeth, I'm coming to join you, honey, as one of these type of moves, and we're due for that. The question is, do we get that blow off top, or do we get it sooner than later? Well, I still think we need a correction. The markets are top heavy. Our software is extremes across the board, screaming for some sort of pullback. So even though we've been grinding higher, we talked about that, this is not a time to load your boat on, hey, we're going higher, let's go higher. And I'm not talking scalping a point or two in this. We're talking for us to go up to 64, 65, 6,600 type scenario. Well, remember this scenario here looks awfully like what we have now, but this one is on a weekly chart. Right? I've shown you this the last several weeks and month plus, but look at this scenario. Doesn't that look awfully similar to, go back and zoom in? It's a price pattern that is repeating itself, and it makes me nervous, right? Makes me nervous that we got the same type of move. We kind of popped one new high, kind of consolidation, popped to a new high, then we pull back to the Magic Fibo, and then we do this V-shaped recovery having no 618 retracement to count, and went on to a new high, and then bingo, what happened? Well, that's back in 2007. Here's what's happening now on a weekly chart. Kind of did the same thing after an uptrend to the last little pop to a new high. Got the big retracement to the Magic Fibo. Again, instead of 3-day, that's a weekly chart. And then we get the same V-shaped recovery without a 618 retracement. And we're getting extensions, and software is heavy. So yes, I think we're going to go to 63, 65, but we need some sort of correction. So I would not be just loading the boat going, well, cool, we can go up another almost 200 points. I like it. That's a good 160 plus points. I'm going to go long right now and expect to get my 160 points right away. I'd be careful. I'd like to see a retracement first And the key retracement is going to be, I wanted to see a bigger retracement. We never got it. We kept grinding to break new high. I wanted to see us come back down into this box area. Well, now, Emil, we have to take the recent low up to the current high, and we need to see, likely, I'd love to see some 618, 786 retracement. That's this pink box. We come back down toward this 58, maybe 5650 area. That would be a perfect place for us. If we are just going to continue this move higher to those targets, I'd like to see a little three-wave pullback into the zone somewhere between that 58 and 56-ish area to then warrant the bounce to go on that blow off top, pushing us into 60. Kind of my target is like 6,600. I've been saying for a long time. So are we going to get it now? Maybe. Are we just going to keep this insidious climb without regard to any type of major pullback and go up into this zone? Well, Elizabeth, I'm coming to join you, honey, still technically on the chart. What are we talking about when you look at the big picture? Go out to a monthly. On SPX, you can do this for the NASDAQ. You can do this for all of them. Since our 2009 low, so let me stretch this, our 2009 low, at no point since this swing point low back in 2009 did we get a 618 retracement. So if you take the low to the high, that was not a 618. And you take this low to that high, that was not a 618. And continue even from this low to that high, it wasn't even a 50% retracement. So since 2009, we have not had a 618 retracement. This is what I like to call a bubble pattern. It is parabolic, and it's due for the big correction. Just like we had back in dot-com bubble burst in 2000, and then the 2007 financial crisis, which at the time I thought this was probably two separate events. But in the Elliott wave area, this is simply an A, B, C type of correction setting up the next big run. Well, our next big A, B, C type of correction is expected from the low to the high. And we can run, let me take some of these off because there's nothing but lines everywhere. I know what you're thinking. Well, I can't see. What are you talking about? We got lines everywhere on this chart. Well, if you just clean it all up and you just put one retracement zone, and this is what we're going to be looking for when Elizabeth, I'm coming to join you, honey, does come to visit. And I'm not saying that we're there at this moment. We're probably going to go toward that 6,600 area. And I did everybody makes a prediction. The weather people, all Tom, Dicks, and Harrys, and everybody else out there, my prediction, or do this because my prediction. Well, I'll leave predictions to the prophets. I'm not a prophet. I don't even play a prophet on TV. But I can anticipate with the best of them. So I made a bold statement. Before we break 7, we're going to break 4, which is down here. Actually, right about there. So before we go up here, break 7, we're going to come down here and break 4. Fair enough? So what are we talking about? We're talking about from this swing point low of 2009 to the high. And again, I don't think this is the end of the road yet. But once we get that 6,600, it's kind of what I'm targeting, we're going to end up looking for a 618 type of retracement. Look where these are currently from this low up to that high. We're talking around 2,800. There's no way SPX is going to go from 6,000 to that 2,800. Well, remember the last time I showed you that 57% decline? What does that look like if we get a 57% decline now? From this current swing point high to this 57%, guess where that puts you? See any meal? Look at that. 57% decline from where we are right now. 57% decline like we got back here. Remember the 57% decline right there? Doesn't look like much when you see this parabolic move and the chart goes crazy like that, but it's the same type of move. And that would put us somewhere around that 2600 level. That's below my 618. So you see why this target is extremely high probability? So I don't want to be doom and gloom here, but even though the economy's starting to turn around and things look great, the technical picture tells us something else is going to develop. Is it our treasury bonds? Well, you know about treasury, they say treasury bonds never, the United States is never going bankrupt on treasuries. Never happened, right? Well, they can just keep printing money. That's good. Hey, they'll never default on a treasury bond. Just keep printing money. Well, you can still lose a lot of money on bonds, even though it's the safest investment there is. Remember what happened in the 70s when inflation went up to 15%? And you lock in a treasury bond at 6%. The next thing you know, 10-year treasury bond paying you 6%. And then before your treasury bond actually expires, 10 years later, inflation went up to 15%. And yeah, you can get out of it once it expires, but try to sell a 6% treasury bond when new ones are being writ at 15%. So people lost up to 50% of their investments trying to get out of them. So if inflation continues higher, and that could happen with a lot of reason, oil prices this, World War III, we don't know what the cause is going to be. But if we get another inflationary period coming, and why inflation? Well, inflation can help pay off our debt. If they don't quit spending money and get the deficit under control, then one way to do it is inflate inflation. That'll help. Sure. I can make the payments, make it easier. Well, I digress, but the whole point is be careful on this. It's all woohoo. Well, I love the analyst out there. The tariffs was going to cause inflation. Well, the tariffs didn't cause inflation. Kind of warned you about that too. Inflation's still coming down. And the tariffs, when I saw that pullback, was a great opportunity to buy the dip. Sure, we discussed that. Well, now the technical picture, once we finally get to that 6,600 zone below 7, we're going to get some sort of Elizabeth, I'm coming to join you, honey. And if people don't know what that reference is, it's from Sanford and Son years ago. Fred G. Sanford, he had little bow legs and he put his hand on his heart and he'd wobble back and forth. Elizabeth, I'm coming to join you, honey. Here comes the big one. Well, I reference that, and we call this the dot-com bubble burst. And then this was the financial crisis of 2007, the real estate bubble burst. Well, the next one's going to be Elizabeth, I'm coming to join you, honey. That's what I'm calling it. And is it today, tomorrow? Probably not. Is it closer to the end of the year, maybe early next year? More like in that than anytime sooner than that. But we still need that correction. I digress, but this happened when, if you listen to the pundits and everybody else out there, including Goldman Sachs and Lehman Brothers and everybody else was telling us, yeah, you need to be going long. Our projected market moves, this thing's just going to keep going and it's going to go into the thousands. Well, long term they were right, but Lehman Brothers went belly up and that started the financial crisis. So we don't know what's going to do it. Maybe it's a fiat currency that goes belly up. Don't know. Don't care. But the technical picture tends to always play out. And this should scare you right here. From the low to the high, at no point since 2009 have we ever had a 618 retracement. Wow. That is bubble pattern extreme, looking for a big decline. And I'm looking for at least a 618, 786 type of zone. At least that. So if you're much more bullish and say, well, with the economy and we're strong and we're building new industries and we're going to be manufacturing and all these things, Well, I think we're at least going to do a 50% retracement, pushing us toward the Magic Fibo, but it fits my initial statement. Before we break 7, we break 4, and the only Magic Fibo available below 4 is the monthly. Everybody feeling me? So be careful. Yes, I think we need a correction, then probably blow off top going into the end of the year. Then we start setting up the big one. ES for our options traders. Same type of move. ES, obviously, it's the same market, just the futures. And from that low to that high, you do the same thing. At no point did we get a 618 retracement off of any of this. So we're due for one. So from the low to the high is roughly same 2800 zone, more than likely. And a big 3-wave type of correction like we did over here, A, B, C. Then we go ripping. We're going to look for an A, B, C. Now, this could take years. It could take like a year and a half to get the first leg down or so, and then several years like we did over here. This took a few years from 2000 down about 2002, 2000, early 3. And then we did what? From 3 up to 7 for 4 years. We just kind of grinded higher. And then we got the next correction down, which took about 2 years from 7 to 9. So it took about a couple of years for that, about 4 years for that, plus this. You look at since we topped out for the dot-com bubble burst in 2000 to the bottom reversal in 2009, that correction from the top A, B, C took 9 years. Wow. And then before we went breaking new all-time highs up here, we're out into about 13. So after the correction was over, it took a total from the time in which the correction started to the time in which it was over and then broke all-time highs was out 13 years. Wow. So we could see that type of behavior again. So be careful. So it's not all doom and gloom, even during the periods of the big correction that may take us more than a decade to see all-time highs again. We could see this upwards correction last multiple years, and that A, the B leg back up, and then the C leg back down. But Gary, I don't worry about things that were going to happen by the end of the year. I want to know now. Well, now we're likely to get a retracement for the same reasons as what we've been discussing all morning. We are exhausted to the upside, and the software is exhausted, needing some sort of pullback. So again, we need to pull this current price action from this low to the high currently. I would like to see some sort of retracement into a sweet spot area sooner than later. But where are we going? For those of you that want to know, we're going to 63.50, 65.20 area. And if we can blow off top, we're going to stay below 7. I don't think we're going to reach this 1618, although it's still below 7. I think we're going to end up topping out somewhere around this 66 area. That's kind of the plan. The question is, do we get a correction now? Then we do blow off top? Or do we kind of grind into these areas and then we get it? But either way, go up now, we get it, or we get a correction, then we do it, then we get it. It's still the technical picture screaming it's going to happen. And it's the Elizabeth, I'm coming to join you, honey, is the name of it. But when does it, what's the official reason Wall Street gives it? Fiat currency failure, commercial real estate bubble burst, treasuries go belly up. It could be anything. I don't know, but be careful. So short term, why are we thinking we need to go and get a correction? Well, software is certainly in agreement. We go over here to our, go back this direction, back to the S&P 500. And we see a daily, this looks all very similar, daily time frame. We're at extremes. We've been slingshotting higher. What does the daily do when it goes from oversold to overbought, slingshots higher? That's a weekly cycle up. Remember the chart we showed you? The weekly went down. We bounced off the weekly Magic Fibo, got a weekly cycle down, and we got a weekly cycle back up. When we hooked and crossed, what did that tell us? The daily was going to cycle. And then the weekly ended up cycling. Why? The monthly hooked and crossed. Well, does it mean you have to be down and oversold to hook and cross? Or it can happen like this. Yeah, this is still a PAI hook, trend momentum cross, slope angle separation. So that told us during that so-called tariff talk pullback that we got that the weekly was going to cycle. Well, here we are. So I'm nervous again. Yeah, why? Monthly's overbought, still up. So that's not the problem. When it starts to hook, you get a monthly hook and a cross like we did there and here. What happened during the tariff talk? Weekly cycle down like clockwork. So do we get a monthly hook and a cross now? Maybe, maybe not. Do we get a weekly hook and a cross? More likely, but maybe we still don't get one of those. Maybe it just kind of flattens out and just keeps grinding and we keep going. And we go up to that 63, 65 now without the pullback. But the daily, weekly, monthly are stating the same thing. Logically, we need some sort of pullback in here. So I'd be extremely cautious at this juncture because we could get that correction sooner or we can get the correction later. But the daily is extremely overbought. It hadn't hooked and crossed yet. My 4 hour doing the same kind of thing, already hooked and crossed. It's engaging and disengaging, which looks for more downside. So as the 4 hour hooks and cross, the 1 hour cycles, and it's not quite finished. And say, well, look at this. My 4 hour hooked and crossed, and my 1 hour is going from oversold to overbought. Red kind of made it down here, but blue didn't make it all the way, came close. And money flow didn't make it all the way. Even trend momentum didn't make it all the way. So this little bounce and rally is more likely going to fizzle and push lower to finish the cycle. And I'm just not comfortable with this chopping, overlapping action without the correction, looking for this to go higher. Now, again, possibly as the 15 is grinding and grunting, doing its thing, let's go back over here to the technical picture. Let's go down to a 15-minute. We just kept grinding higher overnight. Kept grinding and grinding and grinding higher, right? So at some point, these little nothing pullbacks, we start breaking the 15-minute and we don't hold it like we've been doing the last several days, kind of holding the 15, break below very temporarily, bounce off the 30, and then we went right back, held it, bounce, bounce, bounce. So are we going to start breaking it again? If we do, then you go to the 30-minute. And we're pushing toward the 30-minute. Well, we haven't broke that since over here on June 25th. So do we break this? Maybe. Or we hold and bounce. So be careful that I'm looking for a pullback, but once we start breaking the 15 and then we break the 30, then you can start targeting where it is for the 1 hour, and that's around that 61.80 area. And if we don't hold that, then we'll go toward the 4 hour, and it's down here at the 6,000 range. So we break that, then we could get a much bigger correction going toward the daily, which is around 5,800 range. But you can see why we may need a bigger pullback. I'd love to see that. From the recent high to low, I'd like to see us come back toward maybe that 5,800, get like a daily type of Magic Fibo visit, 4 hour daily, bounce off of that. Or we could just ignore it all, punch junk euphoria, and continue to go up to the 63.59. Yeah, 15 years of GPA trading services. Isn't that awesome? And upwards to 65. So I won't say, well, Gary, you're talking about a correction that we have to go up here. We're going to get here. Even if we get our correction, I still think we're going to get up there. That has been the plan. Before we break 7, we're going to break 4, but I've been targeting the 6,600 area for quite some time. And you can see why on the latest high to low, there's your 6,600 target right there, the 1272. And we already broke from the high to the low, the 618786 zone. So we have a 75% chance we're going there, 70 plus percent chance we're going at 65, 6600 level. And that's kind of where we stand. But it doesn't mean because we're 75% we're going there, 70 plus percent we're going there, that we just have to keep going straight up. At some point, we need a correction. And the software is telling us we need a correction. Everybody good so far? So be careful. I kind of warned us during this little pullback. I really wanted to see more. We didn't get it. So same thing here. We'll look to see what happens. Do we get a bigger pullback or do we get just a little smaller pullback? But either way, look for some sort of correction. Fair enough? All right. What about NASDAQ? It's in the same boat. NASDAQ is in the same boat. From the recent high to the tariff talk low, we're going to 23.3 area. 75% chance we're going to visit 23,003. 70 plus we're going to 24.1. I do think we're going to go up here. I still, even though we broke new highs, would like to see that bigger retracement first before going up here. But if we don't get it, this is where we're going, Harold, right there, 23.3, 24.1. I just want to see the correction first. We didn't get the one I wanted here. And these other ones were very insipid, didn't get the deep enough retracement. So just like on this move, we hadn't got a 618 retracement yet, like we showed SPX back in 2007, etc., that we really want to see some sort of retracement to a 618 type of retracement. Well, the markets have changed now. Now we have a new high. So that number keeps changing a little bit. Now the 618 is about 19. It was at much lower down here around that 18.5. Now it moved up to 18.9 because we went on to make all-time highs. So I'd love to see at least this. A nice little correction to the Magic Fibo to bounce off of that. So be careful on this. We are due for that pullback, and we're down 200 points on the futures today. And looking at the software, same thing. No surprise. Software is your friend. Along with the technical picture and my God-given talent to read and interpret price. But look at the NASDAQ. Actually went the wrong way. Look at the NASDAQ over here. Same thing. Daily's overbought, starting to hook. Do we get a cross? Do we get steep slope angle separation? What happens when that occurs? 4-hour cycles down, right? 4-hour cycles down, 4-hour cycles down. So are we going to get another one of these? Well, right now we have the 4-hour hook cross slope angle separation. So scalping wise, got your trigger that would have sold this for you automatically. And we keep going to what? Start getting down oversold. Bingo. Made 200 points there. I could have set that trade automatically to sell the trigger to the downside. You go over here to your expert advisor, properties, and you go in here and you tell it whatever your stop loss take profits are, and you tell it in here, I want to buy right here, use trade trigger long. No. False. I want to trade trigger short. True. And during this rally, we could have set it days, weeks in advance until the software got overbought. We finally got a trigger to fire. Boom, it would have entered automatically for you. Amen. So you can do that through the trade management system, or you can manually do it, or you can just use the software and place your trade in any broker platform out there. So, yep, time frame's telling us we're going to get a pullback. My 4-hour, my daily, everybody is screaming time for a bit of a pullback. How far do we go? Watch. Do we get the daily to hook and cross? If we do, then we expect a 4-hour to cycle like it did last time. So is this going to cycle or is this going to slingshot back up like it's been doing? We shall see. Fair enough. But with the 4-hour hook and a cross, right? PAI hook, trend momentum cross, slope angle separation. That meant the 1 hour would cycle. And what has the 1 hour done since we started doing this? Went from overbought, moving toward oversold, overbought, oversold. So that's what we call a cycle. PAI cycle, price action indicator, AI. This is the best AI of them all. Price action AI, right there. Boom, pushes lower, trend momentum lower. And we're talking at least trend momentum 1. That's this guy right here. That's trend momentum 2. And all three went to oversold. And the trend momentum went to oversold on that. Amen. So is this bounce likely to go breaking new highs? Oh, it certainly could. It made the cycle. We don't have the daily just yet. We got a hook. We don't have a cross. We don't have slope. We don't have angle separation. But should we get that, then what does that tell me? What if we get this PAI hook and a trend momentum cross? We get the slope. We get the angle separation set up. And I see that tomorrow. Then it means I can short it till my 4-hour goes all the way to oversold, right? That's what that would mean. So whether I'm a day trader, scalper, position trader, use a different time frame, and lo and behold, be careful on a correction. We're overdue for one. And is this the end of it? Maybe. We got a 4-hour hook and a cross. We got that. And the lower time frame cycled, so it's possibly it's over and we could go breaking out, maybe. But then again, if we end up seeing this 4-hour cycle down, I can tell you this baby cycles down, it cycles down. This daily absolutely will give us a hook and a cross down, which we already have the hook. We just need to cross and get that little slope angle separation. Then it's over. Just like these, hook, cross, slope angle separation, big move. This might be the beginning of a bigger correction, and maybe we get a daily cycle down. We shall see how that plays out. Either way, bingo, we're going to 23,003, 24. And if we get the correction before then, I think we can even push it more toward 25, 26. If not, and we just keep grinding like we've been doing, just keep grinding and grunting in a laboring rise, then we should start moving toward that 23.3 area, 75% chance, and then continuation toward 24,000 area is about a 70% chance, but I still want to see the correction first. If not, there's your targets to the upside. Short term, could we take a few days or even a few week correction? I'd love to see that to set up the bigger move for the blow off top. But either way, we're going to touch these. If we just keep going or we get the bigger correction followed by the blow off top, you get the scenario. Only one I don't think is going to go too much higher is this IWM. Yes, it's bouncing still, but it's finally, as we're reaching extensions and pushing toward extensions on ES and NASDAQ, the Russell is just finally getting to the 618 retracement zone. So be careful with this. The deeper this goes, the more when Elizabeth, I'm coming to join you, honey. So my big, bold statement, not a prediction, because I leave that to the prophets, but just like the before we break 7 on the SP, SPX, or S&P 500, we're going to break 4. Well, before we go breaking all-time highs way up into the stratosphere up here, we're going to break below 160. So before we go breaking into 250, 260 and higher, we're going to go breaking down below 160. My target is 140 to 120 down here. And if that doesn't hold, we could go all the way down near like 103 area, somewhere 110, 100 area, somewhere around 103. Be careful that this could possibly grind a little bit more, but sooner than later, we're going to get that pullback. And that's the plan for us to get the big move lower. And again, the reason being, go to the higher time frame. And we topped out way back in 2001. And we kind of grinded and we topped. And all this overlapping chopping action is not conducive to this going blasting off, right? This move lower, chopping overlapping action, even this latest push up, chopping overlapping action, we came right back down into the same zone. This is not conducive to this thing going blasting off. It is conducive to a break below this level. So all of this overlapping chopping action says we need a new swing point low below this 160 area. Amen? So you zoom that up, make it bigger for you. So before we go breaking out to all-time highs, we're more than a pattern on this is likely going to see rejection in this danger zone and a push down below 160 as we move into 2026, maybe before. But more than likely as we move into 2026, we'll push down into below 160, below this swing point right there, and push for a target for the 140, 120. Amen? That's the plan. How much higher can we go? Well, we're just starting to touch that resistance zone. Between that 216 up to 230 area is the plan. And that's what I call the danger zone. So I would not, I'm not talking about scalping. Well, I got in, I made 1.5 points, and then I got out. I'm talking about I would not make a bold statement and move to invest where this thing is going breaking out and we're going to go from 216, 217 up to 250. I don't see it. We got to break through this 230 area before we even start contemplating we're going towards 250. And I don't see us making all-time highs. I see a lower high and I see a lower low coming more than I certainly see that going higher. And this is typical and part of that correction. All that overlapping chopping action is not conducive to this little down move representing a new breakout, but we're getting higher lows. Yes, but we're not getting higher highs. We're getting lower highs of late. So the bias is still this rally should end up at another lower high, and then this next low should be at another lower low, which ultimately means before we go breaking out to all-time highs, we're going to break the swing point low below this 165, 160 area. Got it? And the plan is to target 140, 120. So be careful with this rally. It's just rallying into the danger zone that's likely going to get rejected in the weeks and months to come and push us down below 160. Fair enough? All right. And I do expect a correction to come in sooner than later. So, like all the others, even the Russell is due for a correction as the daily, let me make sure what time frame we're on. The daily is getting back and overbought. My 4 hours overbought, been slingshotting higher and depressurizing. So the daily's finishing up that cycle, back and overbought. My weekly, all these are starting to look very similar. This weekly could possibly go just a little more, but trend momentum's there, red and blue's there, money flow just a little bit shy. We're running into resistance. You can see it on the Ichimoku cloud. When you come from below into the cloud, it temporarily should be resistance before it breaks out. And even the monthly, it kind of is engaging back up, but it's still in a downtrend. So what I suspect I'm going to see on this software, as we got the PAI hook trend momentum cross, we got our weekly cycle down like clockwork. Now this is engaging in a slingshot up. I don't think and see this reversing and going all the way back to overbought and we go blasting off into all-time highs. I see this going from a slingshot up to a slingshot down and a continuation where that cycles down and we get that lower high, lower low scenario that we've been discussing. So be careful. Yes, this is turning up and beginning to engage, but my weekly is getting overbought. So what happens when this weekly does this? Then that monthly is going to turn around and disengage. And again, either from a slingshot up, engage, disengage, or it goes from a slingshot up to a slingshot down, but yet still cycles. That's the plan. Amen? So be very careful on this reversal bounce because it is right into the danger zone. Amen? Any questions? Let's continue. Dow, it still hasn't broken all-time highs like the others. It's working on it. Are we going to get the correction before we do it? Or are we just going to keep grinding up? Well, from the recent high to low, 46, 47, maybe as high as 50. This is where I think the markets will reverse from. But the question is, do we just keep going to get there first? Or do we get that correction? I still want to see the correction because, again, I sound like a scratch record. But here is the Dow, and it looks the same. Weekly's overbought, daily's overbought, and we're due for a correction. So I would not be buying the Dow long right now. I never buy any investment when I see a daily, weekly, monthly, all in overbought territories looking for an opportunity for a pullback to buy the dip in an uptrend. I'm a trend trader and I buy dips in the uptrend or sell rallies in a downtrend, but I like the 618, 786 type of moves where you retrace to that zone, you bounce, and then you go up or retrace into it and you go down, but trend continuations following the technical picture. So is this going to go to all-time highs? Yes. Believe it or not, we're going to get all-time highs on the Dow. We already have it on ES and NASDAQ. And IWM, I think, will be much later. I don't think we're going to see all-time highs. I think we're going to see the rejection we just talked about. But this guy, I do think we're going to go up here, and the rest are going to go up here. And IWM is just going to get into the danger zone and reverse from there when these guys get up here and reverse from there. That's kind of the plan. You can look at the Nikkei. Well, that's the Yum, but Nikkei trying to break out 40,000 being boldly rejected. So that's another sign at this point, because up and until we can break this zone, this Nikkei tested it multiple times. Test, 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 went down, test, still being rejected. So if we can get this guy to break and run up to 44, 45, This is where the blow off top will occur on this one. Kind of similar to our Dow, 44 to 50,000 range. And we said the Dow would be similar into the 46, 47, 50 range. See it? So very similar in overall expectations, but by being rejected here, that kind of is telling the story. We might get the correction first before we can get up there. But I do plan to see the Nikkei up at these blow off tops at the same time we get the ES. Again, they're all together. ES up at its blow off top, 63, 65, kind of typing, looking for 66. And then NASDAQ, we're looking 23, 24 already is a high probability. And if we can get the correction first, followed by the push, then we're talking pushing more up to that 25, 26,000 rate. Otherwise, if we just keep grinding and keep going, then I think we're going to top out somewhere in that 23, 24 as opposed to 25, 26. Amen? But in all cases, it's time for a correction. And how much of a correction? Maybe we just pull back to where the breakout was, maybe about 100 points or so, where we broke out from 22.5 area. Or we don't hold that, then we can get a deeper correction toward the low, high, higher low into that 618 retracement zone. I would much prefer to see this retracement toward the 618, 786 zone for us to reverse and go higher. So what is that? If you're looking at any other chart, you simply take the swing point low and you go up to the swing point high. And I got so many things on here. Let me pull the latest swing point high and get this out of there. And let me just remove some of these so I can do it for you. This low, there it is. I just got to find that other piece. There it is. Move that. 1 second while I do that. And get that out of here. There it is. The low to the current high. I'd like to see a retracement move back toward this 19,000 range, maybe 19.7, somewhere in that 618 area. So I'd love to see a little pullback into here before we do blow off top, going at 25, 26. If not, then it is what it is, what we showed you from the recent high to the recent low. We're still talking 23, 24 area. Amen. 75% chance we go into 23.3, 70 plus we go into 24.1. I'm just not convinced this is just going to continue straight up. We need that correction. Amen. All right, I think we've exhausted that. Let's continue. What about black gold Texas T? Well, we had the move, and we have this 618 still holding into a new monthly candle. This is a weekly, new weekly, and we went right back to that 618 zone. We're currently holding it. The longer this holds, the more it sets up another pop. But if we can start breaking back below this $60 range from the recent low to high, if we start breaking that, let me take some of these off because I have so many. I'll just do them again for you. See what we're talking about. I got a lot of these on here and nothing but lines all over this chart. But we're talking about the recent low right there to the recent high. We have the 618-786 zone, which is this green box. And that's what we're testing. So if we start closing below 60, then it sets the tone. We're going to break down to the low 50s, if not 50. Everybody good? From that low to that high, we don't hold the 618, 786 zone, this green box, and you get a signal that oil has closed below $60 a barrel, then highest of highest probability we're going to 52.50. If not, and we continue to hold this zone, now we need to see this thing do the opposite. So stretch that out even more, right, Harold? And we take the prior swing point high to the current swing point low. And when do we get real bullish? Not until we go breaking above this pink box. That's what these are representing. And with the latest price action, kind of updating it just a little bit. So we're stuck between support and resistance. Support, resistance. So highest of highest probability trade. We start bouncing and we start closing above this 75 level. Then game on, you see the smaller scale, 80, 82, 87. But if we start doing that, the probability we go to that 90 to 105 level becomes extremely high probability. And in the short term, if we start closing below 60, it's a done deal to make like an $8 to $10 move down. Any questions? In the interim, what do I expect? A lot of chopping. So I want to see price prove it to me. Prove it to me you're breaking down, close below 60, I go short. Prove it to me you're going up, I want to see you close above 75. I want to be targeting 80, 82, 87, 90, 95, etc. And all I'm looking for black gold to do at some point, it's going to make a retracement, go back to the higher time frame, and we'll pull back in more data. And all we're looking for from the recent high to the recent low is what? 618 retracement, right around that 100. That's it? Wow. So it's pay me now, pay me later. At some point, oil prices are going to go test that. Amen? It's going to test it. Pay me now, pay me later. We're going to test that 100. Is this latest move up and a hold of 618 setting that up? Possibly. Maybe. But until price proves otherwise, we could get this thing breaking below 60. Then we're going to make a new swing point low. Then we'll reassess that, setting up that same retracement back up. So I haven't given up on oil prices to say that because we got this quick little push back down, it's holding the 618. So what are we talking about? This latest move, this big rejection from the low to the high came straight to a 618 and it's holding. The more we hold, the more it sets up a big chance to go higher. But the technical picture is stating we break 75, we're going to 100, 80, 82, 87, etc. Onward, upwards to test that 100. Or we break down and close below 60, then we're going to make a new swing point low below that 55, and highest probability is 52.50 area. Could we still break down and still get to 100? Yes. Could we just continue this and go to 100? Yes. That's why we're stuck between resistance, support. So in closing, the long of it, you see oil prices close above 75. I know it's $10 away. It does that, you're looking at least $20 run toward that 95 to 100 area. And I don't mean as soon as it closes above 75, Mr. Tucson and others, Dan, it's going to go straight from 75 to 95, $20 run in a day, a week, a month. It's going to take time. Could do it very quickly. Well, if we go back to World War III and Iran breaks the deal and they blow up all of their oil and gas areas, then this thing could go ripping up there in a day, a week. If not, and we continue to break below 60, then the technical picture says we're going down to 52.50. Got it? 52/50. So great short would be we close below 60, we're going lower. A great long would be we close above 75, we're going up to 100, targeting 80, 82, just for looking at my Fibonacci's, 87, 90, 95, etc. But it's interesting how we came right to this area and we just stopped in the tracks. Is that setting up more upside? I go extremely bullish when we break above 75, and I go very bearish when we break below 60, down to this target. So stuck between support and resistance, price proved me where you going. Then I take the high probability trades up, or I take the high probability trade down. Gold. Be careful with gold again. We kind of talked about this moving down and then retracing and then the next big move. So I still think that's in the cards, that gold is on a daily time frame looking to start moving back toward the Magic Fibo and lower. So I'm looking for this corrective action, Harold, that we went down, and I was kind of thinking 32-ish. Well, we did 32-ish, but a lot more like the 3260 area before we bounced. But we're targeting 32 here, going back to 33. Wow, look what it did. 32 back to 33. Could we go just a little bit higher? Maybe. But I'm also looking for this rally to fizzle and another big push, which if this is the 1, 2, we're looking for that wave 3 down. And that should be a thing of beauty, at least toward this 3,000 range where the Magic Fibo is sitting. These two black numbers represent this Magic Fibo, the big orange line. That sets up the same high, low, lower high, kind of targeting the 1618. So remember our conversation in the last few classes that when we're looking for a 5-wave impulsive move, when wave 1 is over and wave 2 corrections, typically they go toward a 618 retracement, right? That is typical when you see a wave 1 down, 2 up. In this scenario, you're looking for the move down and a retracement to a 618. So let's redo that right now if I can grab it and see if I can get a hold of it. So I'll remove some of these for a moment, even though it's got my targets in there. And I'm going to stretch this out. This is kind of the path I think we're going to take in the green line. But right now, we have a high to a low. And it looks like I already have it there. That's why it's double dipping on that. I just got to find it. There it is. So that high to this low. Look at where we are, Mr. Tucson. Wow. From that high to this low, right at a 618. Hello. Right at a 618, my friends. How about that? Isn't that amazing? Isn't that amazing? So, is this over? I would not be going long gold right now, unless you're buying gold to hold it for years to come, because I do think gold's going to 5,000. I would not be buying it right here. I'm looking for this thing to short back down, right? So, where's the lower high? So we adjust our little picture here, and we have a high, we have a low. Is this the end of the lower high? Then it still puts us right where we're talking about. So let's repeat the story. We're looking for a 5-wave down. 1, 2, 3, 4, 5. And typically during this period, you see this type of scenario. You get your first leg down as wave 1. Your correction in wave 2 typically does a 618 type of retracement, gets rejected, starts the third wave down, which typically then runs toward a 1618 extension. Everybody with me? Where's this number coming from? It's the 3-point tool. your Fibonacci extensions. You got Fibonacci retracements, you got Fibonacci extensions. Let me take this stuff off and use the big cursor. On this toolbox within TradingView, it's the 2.2, 2 points, 3 points. This is the retracement. This is the extension. So on the extension, wave one top to the wave one bottom, your wave two correction. So it's that high to the lower high. That's the 3.2, and that's giving us this extension down here. Got it? So high, low, lower high. When the wave two is over, typically with a 618 style of retracement, it should end, and then it pushes lower, and the next push lower for wave three typically goes at least to a 618, 1618. So that puts us right dab where? Magic Fibo. Huh. Isn't that interesting? So how? Remember when we talked about over here? Said, be careful. Gold is screaming, we need to come to the Magic Fibo. And we got this move, and then we got this, and then we got that. And it was like, okay, maybe this was the three-wave correction we were looking for, and now gold's ready to go blasting off. But what did I tell you at that point? I said all of this overlapping chopping action does not conducive to this thing breaking out. It's more conducive to continuing this bigger correction before we then do that. And this looks like it's the 3-5-5 type of scenario, right? So this is why we're expecting a 5-wave down. Now, for those of you keeping score, whether you like Elliott wave or that's my job, I tell you where the price is going, turn by turn, GPS coordinates of where it's going. Now I'm giving you tools to help you decipher when we are talking a wave one down, and I said it would go somewhere to 32 to 31.50. We went to 32-ish, right? Close. Just like I told you over here, we go to 31, then back to 33. Went a little bit deeper and a little bit higher, but kind of did the same type of correction. Then we started the next leg down. This is what these green lines are illustrating. And I said, whatever wave one is over, we get wave two correction. Whatever the low is, look for 618 retracement. That's typical where you find a wave one down and the correction goes to a 618 is your wave two. And then your wave three down, use the 3.2. So we use the high, the low to the lower high. And that would then give us a push toward the, at least the 1618, which is the 3000 level, which AKA lines up with the Magic Fibo. And yes, on wave threes, they can get extended and go further than a 1618, but you typically see at least it a do and move toward a 1618. Everybody feeling me? So bottom line, I would not be buying gold long unless you're just buying it now, buying gold bars at Costco and looking to hold them for a while, fine. But in the short term, I would not be going long expecting a big run up. I'm looking for this thing to reverse down. And this is over. Not to say it can't possibly grind a little bit more. Sure it could. It could grind just a tad bit more. That's fine. But I would not be going long here expecting this to blow out. I'm looking for a lower high, lower low. And when this is finally over, maybe it's over already, hitting that 618 level, or maybe it needs to go just a little bit deeper. That's fine. That's what this green line's kind of illustrating. Is it over now? Do we go just a little bit higher? If so, then bingo. Look out for a big sell. Amen? Be careful. Be extremely careful on this rally because it's time to leg three down. So the only question is wave two over? Yes or no? Well, what's another way to take this? Guess what? Use another 2.2, right, arrow? From the low to the current high. What if price keeps retracing and we start breaking below 32.90? and 32.76. Well, this is where all these green boxes and pink boxes and all these things come from. But this is what we're looking at. If this is the end and that wave two is over and we're going down here, what is a high probability we're headed here when this price keeps retracing and it breaks below? I don't mean to move that. I want to put this guy right there. When we start breaking below 32.90, 32.80, 33, 32.80 zone, that's my 618786. So what happens if this keeps retracing and we close below 32.80? Then not only we're likely going 32.40, 32.20, continuation down to 189, but it sets the tone. 1, 2 is done. We're going in 3, and remember where 3 is supposed to end, way down here at the Magic Fibo. So I do this high, low, 618 retracements, up, down, sideways, and then you use your 3-point tool in that scenario for your wave 3 down. And if this plays out like expected, we should see some pretty strong decline in gold prices pushing toward 3,000 in the coming days to week or so. All right. So everybody get the big picture. Retracement looks like it's stopping in the 618 zone. It continues to break from the recent low to high. We break this little green box here, which is my 3300, 3298, 33 slash 3280. We see price start breaking back down below 3280. Then it sets up $280 move lower. And I don't mean, Harold, as soon as it closes below 3280, it is definitely going to go down every day, every second of every minute of every week, etc., until it gets to 3,000. But that is the plan. Amen? Otherwise, we go a little bit higher, still got that 618 zone. We could still go maybe a tad bit higher, but I'm really not looking much further. I'm looking more for the big move down. Everybody got it? So set an alert at 32.80. You see gold price close below $3,280. Then you could set a short term, and I don't mean days, probably weeks, maybe even a month, who knows. But you can set a trade from 32.80 to go to 3,300. $280 move down, minimum. And after the third wave gets down in this zone, look for wave 4. And how much does the wave 4 bounce go? Wherever the wave 1 is, and this looks like this is the wave 1. So I need to kind of change this a little bit, move those to where they went to. And if this is my wave 1 bottom around 3240 area, and that's where we bottomed, then once we get down to 3200 or so, 29, 3200 area, 3000, 29, 3000 area, and then we get a wave 4 correction, that wave 4 should not go into the area of wave 1. So it sometimes be a deeper retracement, but as long as it doesn't cross above that level, we're good for the next push lower, which should push us down to probably about 2,800. So when this is ultimately done, this correction should be over somewhere down here about 2,800. And the mechanism how it's going to get there is now a 5-wave down to get there. In the short term, we should hold this 3370, 3400 zone. Got it? Any questions? So could it go a little higher? Maybe. Is it over? Possibly as well. But that's looking just like it needs to for the next big push. And when that next big push comes, it should be a thing of beauty. $100+, you're talking 200 plus to get down to 3,000 from 33. So $200+ move. And when's a good time to take advantage of the down move when it starts? When we start closing below 3280. Bingo. There you have it. Silver, let's wrap this up. Silver is still grinding. I still think silver is going to come down, probably at least the Magic Fibo, maybe be lower. But again, the rule is when gold makes its final push lower and it's time to say gold did its retracement. If silver's at the daily Magic Fibo, we buy there. If silver breaks the Magic Fibo, and I do have some good till cancel orders down here at 25 and lower. If silver can get that low, by all means, add to the boat. But the big picture is buying it at 32 is still a great deal. I just think it's going to go lower, at least toward the Magic Fibo. And if that doesn't hold, we got a chance to push toward 25. But anywhere between $30 and $25 is still a steal. Why? Look at the higher time frame. We've already set the tone. We're going to $60, $70 zone already. And do I think we're going to get there? No question. There is no guarantees in life, but this is one of them in my humble opinion. We're going to 60, 70. Whether we dip to 29 or we dip down to 25, we're still going to $60 and $70 zone. It is a given. And again, it could take some time. This correction, maybe it's in 2026. Maybe it's pushing a little bit out, but this baby could get there very quickly. And we're definitely going here, in my humble opinion. From the high to the low, we already took out the 618. So we're definitely going up here. No ifs, no buts, no ands, no exceptions. The question is, on this latest correction, do we get to the Magic Fibo on the daily, or do we go toward 25? But anywhere between that 29 and 25 is screaming, add to your position and look to sell when you get to 60, 70 range. And if you look at gold from the same scenario of this 2011 top to the low, we're already, when extending 272, 2618 and above, we're above it right now. Look at silver. Well, I look at SLV or silver, either way, pretty much the same. We have not, we're just in the 618 zone. So we haven't even been to our target 60, 70, right? See it? We haven't been there. Gold's already surpassed the 1272, the 1618. Gold's already passed the 272 and the 2618, right? So if silver ever catches up, you're talking silver up here in 90 to $100+ range. And I think it's going to get there. So now you see why my $60, $70 target is such a conservative figure. Huh. And from the high to the low, we already took out the 618 zone. So it's stating we're going up here, no questions asked. We're going there. Just how far did we correct first? Everybody feeling me? All right, last but not least, crypto. And crypto is due for a correction. It's due for a mighty correction. And is it over? Or do we ready to go ripping higher to our target? Long story, I know you've heard this. I've said it for many times. Target is still 150 to 175. Once we get to 120, 130, our miners like Mara, Riot, BTBT, some of these in this area, Bitto, especially Mara, BTBT, and some of the others, Riot, all those miners. When we get up here, their profit margin goes through the roof, and I expect to see those stocks go ripping higher at that point, but we're not there yet. This is that zone up here where the profit margin goes insane. In the interim, how much more of a correction? I warned you Bitcoin was going to give us a correction. It did it. The only question is, when we got this low, I was looking to come to the Magic Fibo. We were just shy, but it did reach the zone it was supposed to go to, and it reversed from there. Now, what's likely to unfold is from the recent low to this high, Harold, I'd like to see a retracement toward 102, 100,000 range. That would be a good area to set the tone for this correction to then go blasting off. So if we see Bitcoin come down to this 618786 between 102 and 100, bounce and go breaking out, then it sets the tone. We're going minimum toward this guy over here, my 120 to 130 area. Everybody feeling me? So say that again. If this correction comes down here, holds and goes breaking out, so what does that look like? Put your graphs right around. We know the zone to hold is this 102, 100 from the low to the high. Well, let's do it the opposite direction, from the high down to the low. And let's just say it does a 618 retracement. So we come down here, bounce, then we bounce and start breaking the 618786 zone to the upside, which would be this 1063 to 1074 area. See it? 618786 off of that. Then it sets the tone. If this holds and bounces, Harold, and we start closing above that 618, then we're going and skyrocketing not only to the 109, 110, 112 on the short term, but to my big 120, 130 target. Got it? So the only question is this correction going to hold here before breaking out, or are we going to get a deeper correction to finally reach the extension, which is my Magic Fibo down here, and we get this correction here, final push, new swing point low, then it sets up. So right now, it's not a given that this bounce absolutely is going to hold this 618 to go continue higher. If we don't hold it, then we get a new swing point low. Everybody with me? Swing point low is down here, so we'd come down to Magic Fibo. And from that low to that high, we don't hold the 618786 zone. Then we go where? 75% chance we go to 96.9, 70 plus we do this 95. Let's see what that number is. Let me move that a little bit. 95 and change. So let's get it back to where it was. Make sure I got the low. So yeah, that would put us about 95.5, 96.7, 95.5. What does that mean? If this correction continues and we don't hold this 100,000 area, then 75% chance we go to 96.7, 70 plus we go to that 95.5 area, which would mean we come down and get to our Magic Fibo. Then we go blasting off. Or we already finished the three-wave correction here, and that's done. And this is the beginning of a 1-2 breaking out up. So Harold, you see why the 618 is so important? So let's say this was, and we said it earlier, this was a 5-wave down, right? That was 5 wave. That couldn't be the end. We go breaking out because we need a 3-wave correction. So this was most likely the A wave. Then we got our correction up for a B wave. And was this push lower to a new low? That fulfilled what we needed to be the C wave. Right? So far, so good. Now, the bounce, if that is the wave 1, like we're doing gold in the inverse, looking for the correction down. Well, what if Bitcoin is already reverting? That's the 1. This 2 should come down to a 618 toward that 102 level. Then where should it go for wave 3 up? Well, remember the rule, you use the 3.2. So I'm going to remove some of this and I do a 3.2 and say, okay, if that's the low, that's the high, and we come to this zone, then we should go toward that 112. But I think it's going to extend by the time this next run is over into at least my 120, 130 level. That's it. And where's that 1618, 119? This 112 is off of this other move. This is off of that 3-wave move up. Got it? All right. So in closing, I think Bitcoin's going to correct further down. I think Bitcoin is going to correct further down. So let me run that so you can see it clean. So you make sure I'm selling that low. Whoops. Let me get my three wave. Sorry. Three wave. That low. That high. That higher low. See where this 1618 is? So if this is wave one, we're working on wave two correction, should stop somewhere around that 102 area, bounce and be proactive for a wave three, and that should at least go toward that 190, 119, 120 level. Got it? Everybody with me? If not, and we don't hold the 100,000 correction zone, then we need a new swing point low. And this is just part of a messier double combination type of correction. W. So this is A, B, C, W, X, Y. So sometimes it turns into that. This would be the A, the B, the C. This could be W. This rally could be the X. And this next push, if it does that, breaks that low, pushes lower, this would be the W, the X, and the Y double combination, and we still go up there. So nothing says we're breaking down only for a correction, and everything still says we go into our upper targets. And until price proves otherwise, I still think Bitcoin's going to 150, 175. That's been our target since the low back in 2022. When I specifically announced at below 20,000, Bitcoin was a steal. It was a crime to buy Bitcoin at 20,000 and lower. And even if it went toward the 25, 30,000 range, I said it's still a steal of a deal. And look where we've been and where we still got to go. And the best news is we've done this rinse and repeat over and over. Every time halvings occur, 12, 16, the blue lines, 20, 24. The next one will be in 28. So every halving, we get 12 to 18 month run. Then we get a crypto winter low, then 12 to 18 month run from the next halving. Then another crypto winter low, then post halving 12 to 18 month. So you can see every time we topped out 17, 21. We're going to top out up here in 25. And then when do we get the lows? 18, 22. If you keep rinsing, repeating, and going further back, we got a low in 14 over here, etc. So what does that tell us, big picture? When Bitcoin gets this target in late 2025, September, October, whatever it may be, or toward the end of the year, when that happens, then we're going to look for the crypto winter low into 2026. And Bitcoin, if it goes to the target zone and does its typical winter retracement of about 75%, then that'll put us somewhere between 50 and 30,000. And the same thing I gave you here in 22, it's a crime to be able to buy Bitcoin at 20,000 and lower. Well, this is my nibble zone to buy in 26, and then we'll sell in 29, post halving in 28, 12 to 18 months later, rinse and repeat. So with that, I'll say good luck, God bless you, may the pips be with you. I'm humbled and honored to be your mentor and instructor. Remember, a lot of our markets right now have extremely overbought conditions. Looking for some pullbacks to come sooner than later, but no later than later. So be careful. Yes, these look like they're ready to go, continue blasting off. That's kind of the plan, but yet all of these time frames say, well, it's also kind of the plan to take a pause. I still think, just circling the wagons, that all of these markets will achieve their extension. 63, 65, NASDAQ, 23, 24,000 range. IWM is into the danger zone right now, so be extremely careful with that. That Do we go breaking all-time highs? I don't see it. I think this one, where everybody else goes to all-time highs, this is going to make a lower high and then end up pushing lower. But no matter how you slice it, Elizabeth, I'm coming to join you, honey. All of them are going to make their big move down. And according to the IWM, we got to break 160 and lower, targeting 140, 120. And then for the other guys, you go out to your monthlies, use the 2009 Fibo extension low of 2009 up to whatever the high ends up being. We're looking for a 618 retracement. That's where Elizabeth, I'm coming to join you, honey, comes into play. Right around that 618 retracement. Fair enough? And the same thing with NASDAQ. From the low to the high, we're looking for a 618 retracement. When the big one starts to come, we're not there yet. We got to get that blow off top. But when it does, and then last but not least, IWM, same type of thing. We should come below from the low to the high. We come where? Somewhere around this 115. I kind of target 140, 130 start, probably ending somewhere around this 115 or lower. Man, it's screaming, the big one's coming. So do we, and again, I don't think we're going to break all-time highs on the Russell. I think it's going to end up fizzling malizzling in this danger zone and push lower, while the rest, we're obviously at all-time highs, finishes that blow off top, and then we get the big one. But either way, be careful to the upside, as all software is screaming Dow overbought, S&P overbought, NASDAQ overbought, Russell overbought, everybody's overbought, so be careful. So take care, God bless you, we love and appreciate you. That's it, that's all. We'll see you tomorrow.